Welcome to Markets Now. I'm Michelle Rook with Naomi Bloom of Total Farm Marketing, and we did see a little higher day in the grains, livestock futures, some triple-digit losses there. Naomi, the stabilization that we saw in the grain market, is the market starting to kind of absorb this tariff news, or were we adding weather premium?
It's a little bit of both. On the tariff side of things, corn and wheat maybe just a little bit, I don't want to say exempt from tariffs, but they're not quite as threatened as the soybeans are, just in terms of the amount of beans that we sell to China. And today, President Trump now threatening 50% tariffs with China. So we're curious to see if China retaliates or if there's any cancellations for soybean export sales later in the week. With the United States playing well right now with Mexico, that's still really good news for corn as they're our number one trading partner. Corn's numbers today, we had strong finish for the May contract and the July contract for corn as that market continues to claw higher. We are also in that seasonal window where corn prices, soybean prices often, and wheat have a tendency to just increase in prices throughout the month of April as we have to get an idea of planting pace, as we get an idea of where old crop supplies are and where new crop demand could be. So it's going to be a volatile week between keeping an eye on trade and tariff news. Also going to be a volatile week as we continue to watch how the Ohio River Valley fares with all of the flooding and destruction that we've seen there over the past week.
Yeah, how much replanting do you think we're anticipating down there, especially when you look at corn, a heavy lift to get 95.3 million acres planted if you have to replant, right?
Oh, absolutely. It's going to be a struggle for those folks. I mean, a lot of them are definitely planting really, really aggressively the first week of April. And so if they had anything planted prior to that, I would imagine that most of it would have to be replanted just with all of the inundation of rain that they've seen. And then anything that was going to be planted might have to wait a couple weeks until the river levels subside or until we can get that soil dried out.
And do you think the wheat market was putting in a little weather premium, or is that also some short covering?
Well, I think a little bit of both. We have, some of those states like parts of Missouri or parts of Southern Illinois, Southern Indiana, they are wheat growing regions. And so some of that crop might have been affected. We're also keeping an eye on the plains where some portions of the plains had beneficial rains, some didn't. Then there was talk of some really cold weather that came through over the weekend. So it's a wheat crop that might be struggling here in the United States. We'll find out, of course, in a couple weeks. So keeping an eye on weather, very important for the wheat market. We're keeping an eye on any news coming out of Russia for wheat. And just again, that global picture, because global ending stocks for wheat, not just this huge bountiful number. It's been on the tighter side here for a few years.
Yeah, it was encouraging to see both wheat and corn into the plus side for the week last week, despite all of the tariff news. And you mentioned part of the reason those are USMCA compliant commodities. But do you think that at least the corn market can continue to build on it in the old crop category just because demand has still been so good?
I am so excited for old crop corn. I'm actually quite friendly to it. And I feel like if we didn't have all this trade and tariff news, that the May and July futures contracts for corn would be much stronger and much higher than where they are right now. The funds right now for corn are pretty neutral. They had sold off plenty of contracts. And so if we can get some friendly news to occur later this week with the USDA report or on planting delays, the funds might come back in on the long side of the market and become buyers again, because there is still a friendly story to tell on that corn market for the old crop. And then, of course, depending on where they put that ending stock number for the old crop on Thursday.
Yeah, is there any possibility of getting old crop ending stocks on corn below 1.5 billion bushels? And what does USDA do with the South American crop?
So 1.5 is what they are expecting going into Thursday's WASDE report. And I think that there could be a chance that it is below that. And if it comes in lower than 1.5 billion bushels, that's not priced into the market yet in any capacity. And that would be friendly for the marketplace. And of course, we're also going to be watching to see what the USDA does with South American production For corn production, we are keeping an eye on that safrinha crop. Of course, as you know, that's 75% of their total corn production with that second crop corn. And that is actually, has been sold to the world. It's been accounted for. The world needs the Brazilian farmers to have a really, really good crop. And so we're keeping an eye on weather conditions down in Brazil and wanting to see if the USDA makes any adjustments yet to that safrinha crop or to the Argentina crop. My guess is that they don't do many tweaks with the South American production quite yet. That might be something that comes in down the road.
Yeah, no doubt. And you already talked a little bit about soybeans and their reaction to the Chinese tariffs or the retaliatory tariffs. Are you concerned about cancellations of soybeans on what they have left to ship?
Yeah, that is definitely a concern to see on upcoming weekly export sale reports. If China tries to use that as a retaliatory measure against the United States. At the end of the day, though, China does have to buy some soybeans from the United States, from the Northern Hemisphere, in order to have their needs met year round from both hemispheres. So they could, of course, purchase less from us in the new year, which could affect the new crop and new crop demand. So that is something to be watching for. But at the same time, I think too, if soybean prices get too much lower, well, that might spur some demand with lower prices. So lots to monitor there.
Yeah. So cattle and hogs down here today, some triple-digit losses after some limit down closes on Friday, despite the fact that the stock market did kind of rebound during the session. How concerned are you about that reaction?
Well, cattle market has needed a correction. We've been talking about that for so long, and we had one heck of a correction between Friday's trade and today's trade Monday. So the marketplace for the live cattle and the feeder cattle went all the way down and tested an uptrending line that has held since September. So this has been so far a really good correction. But of course, the concern would be if the stock market continues lower, what is the sentiment then of the US consumer? Are they not as excited to go out to eat? Are they going to reduce their spending because they're seeing their 401ks get a little bit smaller? So that's going to be the question going forward. We want to keep an eye on consumer demand, keep an eye on box beef values, keep an eye on the cash market, and then also export sales later in the week. If the uptrend line is broken, and again, it's been tested, this would be the third time it's been tested since September. But if it should fail, that could trigger more technical selling. That could trigger the funds to exit more of that long position that they have. And we want to keep an eye on that. But at the same time, if it holds this uptrending line, well, then we might see the cattle complex just do a few days of some sideways trade, inside trading sessions where we see maybe all in one day a $2 move higher or $2 move lower as the marketplace just tries to essentially tread water and get a better handle on what's happening with the cash market and with demand. So I would say, be cautious yet with the cattle complex because it's had such a dynamic rally. But of course, we have to keep an eye on tariff and trade news on how that could affect the cattle market as well. So maybe continue to have puts under the market or sell stops under the market in case that uptrending line should break. But right now, it might just be a correction. So we'll find out later this week.
All right, let's hope we can stabilize here. Thanks so much, Naomi Bloom with Total Farm Marketing. That's Markets Now.